Hey everyone, welcome back to the channel. In today's video, we're talking about AMD, their latest earnings report, the huge new partnerships with OpenAI and Oracle, and of course, the big question everyone's asking right now, is AMD stock still a buy after this massive run? I recommended buying AMD stock back in May, and since then, the stock has more than doubled in value. Now the company's making headlines again with a multi-year deal with OpenAI that could bring in tens of billions of dollars in new revenue, plus a growing partnership with Oracle to power their AI cloud infrastructure. But with the stock up this much, and AMD now trading near record highs, a lot of investors are wondering if there's still upside left, or if it's time to take profits. So in this video, we'll break down AMD's latest earnings, what these new deals really mean for the company's future, and whether I still think AMD is a buy at these levels. All right, let's get into AMD's Q3 2025 earnings report because these results were seriously impressive and set the tone for where this company is heading next. AMD reported record revenue of $9.25 billion, which is up 36% year over year and well above analyst estimates of $8.74 billion. Adjusted earnings per share came in at $1.20, beating expectations of $1.17. That's a 30% increase year over year, showing that AMD continues to expand profits, even while investing heavily in AI. Net income increased 31%, and free cash flow more than tripled compared to last year, highlighting just how much stronger AMD's cash generation has become. The big driver this quarter was the data center segment, which hit a new record at $4.3 billion, up 22% year over year. That growth was fueled by strong demand for AMD's EPYC processors and Instinct MI350 GPUs, which are now powering more large-scale AI workloads. The client and gaming segment also came in strong with $4 billion in revenue, up 73% year over year thanks to strong sales of Ryzen CPUs and Radeon GPUs. Within that, gaming alone grew an incredible 181%, showing a strong recovery in the gaming market. On the other hand, the embedded segment brought in $857 million, which is down 8% year over year, although it did improve 4% sequentially, so there's at least a sign of stabilization there. Operating income came in at $2.2 billion, representing a healthy 24% operating margin, even as operating expenses rose 42% year over year to $2.8 billion. Most of that increase came from aggressive investments in AI research and development and go-to-market activities, which are key to staying competitive with NVIDIA. AMD closed the quarter with $7.2 billion in cash and short-term investments, against $3.2 billion in total debt. The company generated $1.8 billion in operating cash flow and continued its share buybacks, repurchasing $89 million worth of stock this quarter, $1.3 billion year to date. Looking ahead, AMD guided for fourth quarter revenue around $9.6 billion plus or minus $300 million, and a gross margin of about 54.5%, both slightly ahead of expectations. However, the guidance also noted that it does not include any revenue from MY308 GPU shipments to China due to export restrictions. A reminder that geopolitical risks could affect AMD's growth just like they have for NVIDIA. There's also some industry debate around how OpenAI will manage multiple hardware suppliers, since they're now partnered with both NVIDIA and AMD, and whether AMD can secure a large, consistent share of OpenAI's infrastructure build-out. And one last thing to watch, AMD's upcoming transition from the MI355 to the MI400 GPU series in 2026 could create a short-term dip in momentum as the new architecture ramps up. Overall, though, this was a record-breaking quarter. Revenue up 36%, profits growing, data center strength, and clear signals that AMD's AI business is accelerating. Combine that with the new OpenAI and Oracle partnerships, and AMD is positioning itself as a real contender in the AI compute race. So what's really driving excitement around AMD right now is their new partnerships with OpenAI and Oracle. Starting with OpenAI, this is a multi-year strategic deal that could be absolutely game-changing for AMD. OpenAI plans to deploy up to 6 gigawatts of AMD GPUs over the next several years, beginning in the second half of 2026, with AMD's next-generation Instinct MI 450 accelerators. To give you some perspective, 1 gigawatt of AI compute power represents hundreds of thousands of GPUs, so this deal is on a massive scale. AMD estimates the partnership could generate tens of billions of dollars in revenue, and some analysts believe it could reach between $80 and $100 billion if all phases are executed. That's more than 4 times AMD's total data center revenue from last year. As part of the agreement, OpenAI also has a warrant to purchase up to 160 million AMD shares, which would be about 10% of the company if fully vested. Meaning OpenAI has a financial incentive to actually use and deploy AMD hardware at scale. This deal also diversifies OpenAI's hardware supply beyond NVIDIA, which has dominated the AI chip market so far. For AMD, it's not just a massive revenue opportunity, it's also a credibility milestone, proving that top-tier AI players now trust AMD chips to power next-generation models. Now let's talk about the Oracle partnership, which in some ways is just as important. Oracle has been expanding its AI cloud infrastructure, OCI, which powers workloads for OpenAI, Cohere, and many other AI startups. To support this demand, Oracle announced it will deploy AMD's Instinct GPUs in its new AI superclusters, scaling up thousands of chips to serve training and inference workloads. This partnership adds another multi-billion-dollar customer to AMD's data center portfolio and creates a feedback loop. As OpenAI and other developers run workloads on Oracle Cloud, AMD benefits from both sides, as a hardware supplier to Oracle and a direct supplier to OpenAI. Essentially, AMD is embedding itself deeper into the AI ecosystem, not just selling chips, but powering the infrastructure behind the companies building the future of AI. And when you combine these two partnerships, OpenAI and Oracle, the potential upside for AMD's AI and data center business is enormous. These deals alone could reshape AMD's revenue mix over the next few years, potentially making AI the single biggest driver of growth by 2026. So where does that leave AMD right now? The stock does look expensive at the moment, trading near all-time highs with a very high PE ratio. Valuation is definitely rich, and there's no getting around that. But at the same time, AMD just delivered an extremely impressive quarter and issued strong forward guidance. If they can keep this momentum going, growing data center, AI, and gaming revenue at the same pace, then that premium valuation could actually be justified. The key question is whether the AI wave continues, and honestly, there's no real sign that it's slowing down. Demand for compute power, GPUs, and AI infrastructure is still exploding, and AMD is positioning itself right in the middle of it. So, my current view, I'm not chasing AMD at these prices. The stock's had an incredible run, and while the long-term story still looks strong, I'd personally look to add more to my portfolio if AMD drops back to around $200 per share. For now, I'd wait a little bit and see if the company can keep delivering these strong results over the next couple of quarters. If they do, the stock will easily justify its valuation. But patience might pay off here. All right, guys, that wraps it up for today's video. If you found this breakdown helpful, make sure to hit that like button, subscribe if you haven't already, and turn on the notification bell so you don't miss future updates. Let me know down in the comments, do you think AMD can keep up this momentum, or is it getting too expensive here? I'd love to hear your thoughts. Thanks so much for watching, and I'll see you in the next one.